So, so thank you, Carmine, for taking the time to join us today. We are looking forward to hearing from you about all these niche programs that AFR offers. And I also want to introduce our host today, Amy Hullett. She's Director of Sales at ARIVE for Western Region. So Amy, do you want to take it away?
Absolutely. Hello, everyone. Thank you so much for joining us today. I'm excited to have AFR in our spotlight. Carmine and I have been speaking a lot this past week about many programs that AFR offers. There's some really neat niche products. Harish, if you can move to the next slide, I just kind of like to do a quick overview. So they have down payment assistance. We're going to spend quite a bit of time on that particular product, but they also offer renovation loans, one-time closing, construction loans, manufactured housing, and VA loans. So at the end of our down payment assistance section, we'll be able to kind of touch on those and give you some information about how to structure those with AFR. But I would like to really spend some time on the down payment assistance. There's quite a few products out there from different lenders. There are some really unique qualities about AFR's program. So I'd really love to spend some time on that. If you could please, Carmine, tell us, what is special about this particular product?
Sure, Amy. First, thanks for having us today. I'm really excited and looking forward to talking about DPA. I think once we go through the program, I think everybody's going to agree that this is probably one of the best programs on the market. Outside of Washington and Hawaii, there's really no geographic restrictions at all. So the borrowers don't need to be a first-time home buyer. They don't need to be in a specific job. And you don't have to worry about the income requirements. There's not a certain amount of income that you have to make or is less. So simply, if you qualify for an FHA loan, you're eligible for our DPA assistance program. So that's the advantage of our program itself. If you have an FHA loan and you're approved eligible, you're good to go. You can buy the house today with a 3.5% DPA through AFR. Very simple process. We'll talk about it as we go through the program today. Everybody's going to have a lot of questions. We'll answer the questions. At the end of the webinar today, I'm going to give out my email address and some support information. We're going to help everybody on their call so they can get their clients in a home today with our DPA.
Perfect. Carmine, thank you. So can you just explain to us, how does the DPA funds work? Can you tell us the structure of those?
Sure. At the closing table, AFR provides DPA. That's either going to be 2% or 3.5%. And that's worked out between the mortgage loan originator and the borrower. What program works best for them? And it's a completely forgivable grant. Now, let's say, for instance, borrower goes into their home and it's like, I love the home, but I don't like the cabinets. I don't like the flooring. Do I need to walk away from this house and try to find something else? If you love the house, no, buy it. Combine it with a 203K, do the renovations that you want, whether it's 20,000, 30,000, or 100,000, do that and buy the home that you want and that you love, and knowing that your down payment for the purchase price is covered. Now, again, when you combine this also with seller concessions, because it's an FHA loan, you can combine up to 6% seller concessions, and that could be used to help reduce the cost of your closing cost. So it's a great opportunity to buy the home that you love, fix it up the way you want it, use some seller concessions, use the DPA advantage, and get into that home today.
Wow. Okay, so how do they pay back these funds? All these products have different requirements. I particularly like what you had to say about your product. So if you can explain to us what happens to these funds.
Sure. So first of all, no restrictions, no repayment, no turn time. Let's talk about what this means. So when we talk about the restrictions, there's, if you have the FHA approved eligible, you're automatically eligible for the DPA. When we talk about no repayment, it's completely forgivable. And because this is bar paid compensation, there's no EPO on it because it is a bar paid. Now, if you're going to utilize an FHA streamline, there is some seasoning rules for that. But when you get to the core of this slide, this is what makes it so amazing. When the borrower signs the note, it's completely forgiven. There's no second mortgage. There's no second lien. on the property, nothing on the title, nothing on the deed. And when we talk about additional turn time, what happens when somebody says, we're going to use a DPA? The selling real estate agent starts to cringe. First, is the money available? How long is it going to take for that underwrite? And they've got 2 or 3 other contracts without that DPA. What makes us different? There's no additional turn time. Everything's done in-house. We are the administrator. So no second mortgage, no second lien, no restrictions, no repayment, no additional turn time. That's the AFR advantage.
Wow. So it's really a grant. This is not a loan they're paying back. They're eligible through the basic requirements we're talking about, or approve eligible findings, FHA first, very little, no restrictions really on the borrower, right? As long as they're going to be living in the home, so primary residence.
Yes, and that's why I say at the end of the presentation today, I think you're going to think like me. This is the best DPA program on the market today.
It's really cool. I love that this is such an easy transition to an FHA streamline, because we're all hoping that rates will continue to take little dips, but to not have to incur so many new closing costs for a new refinance. That's the struggle with a lot of down payment assistance, is like the FHA's a loan's already there, right? So as long as we're reducing the payment for the borrower and the rate, they're going to benefit, and it's an easy refi.
Exactly. So, it's a great opportunity. I've done this webinar, this presentation for years, and we've helped so many people over the years get into homes, and they're so happy today because they're in a home. I look forward to the next chapter of the people today that want to get into a home, because it's springtime. We're starting to see an uptick. They're starting to see homes that are closing. And if you've got somebody that is on the fence post, this is that great opportunity. This is the option now. It's like your down payment is covered through FHA.
And so you touched on this a little bit earlier, but I wanted to make note of it. There are borrowers out there who are kind of pushing the limits of their affordability, property types maybe that they can't afford. You're not in the best shape. So you did mention that if they do really need to buy a home in their price range that does need a little bit of cosmetic work, or even a little more work beyond cosmetic, you said that this is eligible. Can you kind of explain how that works?
Sure. So with the way it works with our renovation program, you can do this with either a 203K limited, which is $35,000 or less. Now, if it's in a qualified opportunity zone, you can increase that to $50,000. The benefit of doing a limited, think of it almost like a streamline. You don't have to use a HUD consultant, and you're going to save some costs. You could also do this with an FHA repair escrow. So if you're buying a home from HUD and it needs some small minor repairs, you can build that in. And then there's a 203K standard. This is where I need a new roof. I need to move these walls around. I need to, maybe add a second floor. There's a major construction. So let's get into some of the nitty gritty though, but how does it actually work? So you have, let's say, I like to keep numbers real simple. Let's say you have a $200,000 home. Purchase price is $200,000. So that $7,000 minimum required investment through FHA can be provided by the DPA. Let's say you want to do $100,000 worth of repairs. So after you've figured out the contingencies and the inspections, it's $100,000. Well, that's going to be an extra $3,500 down. That would come from the borrower. But $7,000 is already covered by the DPA. Now, you can do this. It's a purchase transaction only. So you can't combine this like with a second home or an investment property, but you can combine it with a 1 to 4 family. So if you have somebody, let's say, buying a duplex and they're trying to use that rental income to offset the cost of their mortgage, they can do that. Also, manufactured housing. If somebody wants to buy a manufactured home, you can do this, even with approved condos, homes that are in planned unit developments as well. Because it's an FHA loan, you are going to follow the FHA traditional guidelines and all of our FHA overlays. And you have an LTV of 96.5%. Can we go into the next slide? I was talking about renovations, and here is where you can combine it with the repair escrow, the 203K standard or limited. Now, if you want to combine this with another DPA program, there's programs out in California and other states throughout the country, you can't combine it with another DPA or the good neighbor next door, a high balance loan. It's for your traditional FHA 203B product.
Okay. What I like about it is that, brokers who are pre-qualifying borrowers who need down payment assistance, who want to utilize a grant like this, is a lot of times they don't know what property they're going to be making an offer on, and even sometimes what may come up as far as the conditions. So it enables the broker to not maybe have to resubmit this loan somewhere else, because now they need a renovation loan or some, repairs done on the property. They can really keep it with AFR, utilize both. You guys will help out with that, which is a win, saves time for everybody and stress. So that's
we're looking for solutions, and with our DPA Advantage, that's a great option. And then when you combine the 203K, it just brings it to a whole new level. So I think it's one of the best DPAs on the market today.
Absolutely.
So Carmine, I want to take one question at this point. You mentioned it is not available in Washington state. Could you clarify where it is available and not available again?
Sure. In the state of Washington, it's not available in the state of Washington, and also the state of Hawaii. So those two states, there's a geographical restriction on just those two states.
Thank you.
Perfect. So are there any restrictions for borrowers in order to be able to use this product?
Well, there's no restrictions, but there is a home counseling class. If you can go to the next slide. So there's a homeownership education course that's required. Now, not all the borrowers need to take it, only one does. And what happens is the borrower will it has to be HUD approved. It could be a home counseling education course or a pre-purchase counseling course. The borrower is going to pay for the course initially up front. When the loan gets disclosed, AFR or the mortgage loan originator, whoever's doing the disclosures, and again, AFR will be more than happy to do so, we will disclose $100 for the home counseling. And then at the closing table, up to $100 gets credited back towards the closing costs. Now, if the subject property is in the state of Wisconsin, this is where the DPA is located. It's a state agency out of Wisconsin. So if the subject property is in Wisconsin, up to $700 of the appraisal is getting credited back towards the closing cost also. So we tend to see the homeownership education course running somewhere between $50 to $75. So that money would be credited back. The underwriter is going to put a couple of conditions on the approval. One is a copy of the invoice showing paid, and the next one is the certificate that they completed the class. Now, I want to stress, only one person needs to take the class, not everybody, only one person.
And also, Carmine, just to add to that, the borrowers do not have to be first-time home buyers. This is just a requirement that one borrower completes the home ownership education, which is really unique for a lot of down payment assistance. A lot of times they have to be first-time home buyers. So this is available to everyone.
Yes. So again, if it doesn't matter the profession. Now, we're going to be talking about some documents on the next couple of slides where we're going to get into some qualifications. That's just for the purposes for the DPA, but at the end of the day, if you have your approved eligible on your FHA loan, the DPA program's available to you.
That's amazing. Okay.
It is. Yes, it's exciting.
Yeah, it's really exciting. We want to prove eligibles and send it in, get the money.
Also, if you have a refer, you can send a refer over too. And if the underwriter reviews it, approves it, they're eligible too.
Really? So they can manually underwrite these?
Yes, we can manually underwrite these.
Okay.
We didn't talk about that in the beginning, but I wanted to let everybody know, yes, we can manually underwrite these as well.
Do you recommend that in those instances that the brokers, processors maybe reach out to their sales contact or AE to review? Do you think that's helpful?
Yeah, one of the things when you're doing a manual underwrite, the guidelines are going to be a little bit different. Specifically, the front end and the back end ratio. They're looking, in order to raise the debt to income ratio, they're looking for some items to offset that. And they've done a great job of letting us know in the guidelines what you can and cannot use to get a higher debt ratio. So reach out to your account executive or reach out to my team sales@AFR Wholesale. And don't worry about writing down that email address. I'm going to have it at the end. And we
Okay.
can send you the guidelines. We can send you the information, what they're looking for, so it can help you with the deal.
Perfect. So I'd like to kind of review what the process is like. What does AFR ask of the borrowers to do? Are there any disclosures? If we can kind
Yeah.
of talk about what that process looks like, that would be great.
Sure. So there's some eligibility factors. Now, in the first part, I said you don't have to worry about the eligibility, but now I'm talking about eligibility. So give me a moment to get through a couple of slides and I'll kind of put this all together. So first of all, you can become eligible for a DPA if your property is an underserved census tract, if you're a first-time home buyer, if you're a first responder, you're in the medical field, you're in the military field, you're, again, education, you're eligible. Or if you make a certain amount of income or less, you're eligible. But there's the next one on the right side. It says, if none apply, at minimum, the income and credit must meet FHA total scorecard or manual underwriting requirements. So this is the part that says, if you're approved eligible, or if we manually underwrite it, you're automatically eligible.
Gotcha.
Can we go to the next slide? So what happens is there's 3 forms that are associated with our DPA. And this particular form is the application. There's a little orange box kind of wrapped around it. And the very, very first paragraph says, we, or attest that one of the borrowers is planning to become or currently meets one of the following. And the first box is your income. The second box is your profession. The third box is, I believe, the first-time home buyer. And the last one is underserved census tract. So if you're doing the approve eligible, that's based on the income. You click the first one. If the borrower is a first-time home buyer, then they can click the first-time home buyer. So they just need to click one of the boxes, sign it, and send it over to the DPA so they can kind of track to see how they're helping their community. The next one document is the grant letter. Now, this is critical. So this is signed by PFA. And they're out of Wisconsin, as I mentioned earlier. They're a state agency that provides a DPA. And in the second paragraph, there's a little yellow box. And in that yellow box, they're going to put the amount of the gift there. It's either going to be the 2% or 3.5% of the purchase price. I always get a question, is it on the loan amount or the purchase price? It's on the purchase price. If you're doing a 203K with it or repair escrow, it's the purchase price, not the purchase price plus alterations. The alterations is a responsibility of the buyer. Now, the third paragraph, just above where the DPA signs, the last paragraph, it says, you have no obligation to repay this grant. It's in writing that you don't have to repay it, because, I'm the skeptical one. It's like, okay, I don't have to repay this back. Show it to me in writing.
What's the catch, right?
Yeah, what's the catch? Show it to me in writing. Here it is. It's in writing. You don't have to pay it back.
Very cool. And are these disclosures that we're talking about, these are something that AFR can send out to the borrower after
Yes.
the loan comes in?
Yeah,
Okay.
so AFR, when you submit your loan to AFR, it's going to come up to our setup team. Now, let's say, for instance, we're going to do your origination disclosures. We'll send documents out with the origination disclosures. If you do your disclosures, then we'll send these out with our lender disclosures, and the borrower will be able to do them electronically. And there's one more document I want to share with everybody, and that's the next slide. And this is the disclosure. So basically, there's 2 different disclosures that we're going to send out, Amy. The first one is if they do the 2%. If they do the 2% grant, that means that the 1.5% is going to be their responsibility. However, because this is FHA, you can get a gift from a family member for that other 1.5%. So you have that option. Let's say the mortgage loan originator, they're talking with them, they're reviewing the different options, and the borrower says, you know what? I can't get a gift, or I need that money for closing costs. Let's do the 3.5%. Well, in the 3.5%, the disclosure lets them know that there is no money required for them for their down payment. Their minimum required investment has been satisfied. So now you can work with the sellers trying to get some seller concessions to reduce that out of pocket so they can buy today. And if we can go to the next slide. So when you're setting up your 1003, a couple of things to think about. First, when you're doing your 1003, section 4D, there's going to be, is it a gift of cash or is it a grant? And then is the money deposited or not deposited? And what's the source? And then what's the amount? So for the deposited or not deposited, whether you're using DU or LP or manual underwriting, it's all the same. It's not deposited. For the source, whether it's LPA or DU or manual underwriting, it's all state agency. And then for the cash value, it's the 2% or the 3.5% of the purchase price. That's all the same, no matter what findings you use. So where's it different? It's different on, is it a grant or is it a gift of cash? Now, if you're doing the income or you're doing the approve eligible or a first time home buyer, it's always going to be a gift of cash. And that's the same on LP, the same on LP. Now, if you're doing it based on profession or based on an underserved census tract, then you have the option of, you can select grant or gift of cash. So if you select grant first, let's say you don't get your approved eligible, then try the gift of cash. Try both different ways on those. And that's really the only big requirement for the 1003. The source of the down payment is gift source government assistance, FHA gift source government assistance. The DPA is PFA, the acronym PFA. They're the ones providing the DPA. And so when you're putting this in as the gift, you'll list the PFA there. And that's really basically the only requirements. When I send out, after this, I'll send out an email to everybody who's joined, and I'll include access to our presentations that has all of this stuff documented for you. You have it here as well. I want to make sure everybody has all the information that they need.
Yeah, this is helpful because I do think that there's a lot of different ways of structuring these down payment assistance, and some are showing them as true seconds. And so sometimes loan officers are, a little bit confused about the results they're getting. Is my CLT correct? Am I getting approved eligible? Is it reading the AUS correctly? And so this is helpful to note that it isn't a second, because it is really a grant, or for AUS purposes, a gift of cash. There isn't going to be a second. Your LTV is still going to be the 96.5, and then you're going to just show the funds to close coming from the state agency PFA. So, okay, that's very helpful. Easy to do.
Yeah.
You can do this in ARIVE very easily by showing these funds in assets.
And that's why I think this is the best DPA in the market, because when you think about it, there's the no restrictions. If you get your approved eligible, you have your 3.5% DPA. It's not a second mortgage. It's not a second lien. The borrower has that flexibility 2, 3, 4, 5 years down the road, that they're not worried if they get transferred and they have to sell their home, or they want to rent out their home, 2 or 3 years down the road. They want to refinance. They have that freedom and flexibility to do what they want as well. Again, I'm going to keep saying it. I think it's one of the best DPAs on the market.
Yeah, and they're not upside down from the beginning. They have equity, right? As the market cooperates, there's equity hanging in there, and as soon as they close, they have that, which is really important to buyers right now.
So we do have some great questions that have come through. So first one is on ARIVE. So yes, you can price these loans in ARIVE today. If you select the loan program as FHA and investor or lender as AFR and run pricing, if your scenario is structured correctly, the DPA advantage 2% and 3.5% will show up as two separate programs. Pick whichever you like. And then like Carmine explained, make sure your assets are structured correctly. So try both, like he said, gift of cash or grant, and run AUS and see what findings you get. So you are able to price this in ARIVE as well as qualify and structure them in ARIVE and run AUS, and findings will come back as approve eligible. We have a lot of users doing it. If anybody has more questions, reach out to our support team and they'll be able to provide more guidance. Few other questions, maybe Carmine, you can take. Is this lender paid or borrower paid? Claudia is asking. Do you have to go ahead?
Yeah, it's bar paid, and great segue. Can we go to the next slide? The next slide talks a little bit, I believe, about the rate. So we've changed the pricing on our DPA. Now that, spring is in the air, there's a lot of people that are buying homes. So what we've done is for the 3.5% DPA, it's 7.25 at par. So we're really working hard on the rate to make this affordable for everybody. And it's even lower on the 2%. And we just look forward to helping the families, achieve the dream of home ownership. So 7.25 for the 3.5% rate today. I checked it this morning, 7.25, even lower on the 2%. So
And this is where that seller credit would be helpful, right? You've got your rate at par and you've got your down payment covered at this particular rate, lower rate, obviously, if you're going to come in with some of your own funds or give funds.
Right.
But if you have the seller credit negotiated, then that can help offset the borrower paid compensation.
Exactly.
Correct?
And that's what we're working really hard to do, is keep the pricing at par.
And this is not very far from traditional conventional programs, Carmine, right? Like where we see the rates, 6% is not very far off from where conventional is pricing these days. So for a FICO of 620 plus. So
exactly. Yeah, it's a great program.
Well, and I also, I'm very familiar with down payment assistance for many, many years. And I think there's a lot of brokers who, kind of, naysayers on types of programs like these, but I've just seen thousands of borrowers benefit from buying a home, being comfortable buying a home because they are getting this additional help. I mean, every dollar counts when you're buying a home, right? I mean, our money needs to go in other places. There's inflation, things are costing a lot more, and we want more buyers to be able to purchase their home. It's money that's there to them to get into the home, and 2-3 years from now, they're never going to regret buying that home, right? They can refinance later, do a streamline. The home ownership is the piece that needs to happen. And so we can find a million reasons why not to buy a home. It's too expensive, this, that, whatever. But if we can use this product to talk to more realtors, which we haven't really touched on, kind of who to talk to about this product and how that can help them. But, being able to just let your referral partners know that you have this product that is so broad, across the nation, which is really cool. It's not just, my state. Now I have to work with people here to be able to advertise that, because we have a lot of brokers that are licensed in dozens of states, so this is a really cool, program for their toolbox to be able to offer to buyers.
Amy, I talk to hundreds of people all the time, about our DPA program, and it's one of our busiest webinars that we do. But I think the greatest thing for me personally is the stories I hear after the fact, the families that they've helped. If you go back 3 or 4 years ago, and the rate was a little high, but they're so happy today. If you go back a couple of years ago, the rate was a little high, but they're so happy today. They have the flexibility. If they want to do an FHA streamline when everything qualifies, they're more than welcome to do so. They want to sell their home a couple of years down the road, they can do so. I think you hit on a really important topic. Just get in. This can get you into that home, and once you're a homeowner, everything changes. So this is a great opportunity. I'm so excited for AFR to offer this program, as well as our renovation programs, from our VA renovations to our one-time close. We're the innovators when you're looking for a niche product and trying to close more loans and build partnerships with both builders and realtors. We do this. We do it. We do it every day. We're comfortable in this space. We love this space. And we want to connect to more brokers. Reach out to us. We're here to help.
So we have some really great questions coming in regarding, prepayment penalties. How long do you have to wait for seasoning? Can you refi immediately, or is there a waiting period? Can you touch upon everything? It's a great program. So once you're in the program, what kind of restrictions, if any, selling the house, EPOs, do you want to touch base on that?
So let's talk about the prepayment penalty. No prepayment penalty. So the EPO, it's borrower paid. So there's no EPO because it's borrower paid. Let's talk about the refinance. If they want to refinance and go through the FHA streamline, there are seasoning requirements for the FHA streamline. If somewhere down the road they want to sell their home, they're more than welcome to sell their home. If they're moving and they want to sell their home, go right ahead. There's no restrictions on selling or refinancing. that AFR puts on there. But if you're going to do the FHA streamline to reduce the cost, make it a simplified process, there's about 6 or 7 payments that they're going to have to make before they can do that. And again, we can take a look at the guidelines on that, follow the guidelines, and we'll take a look at that. But we make it real simple, real easy.
Does this program run into any QM test issues like qualified mortgage test? Does it apply? Carmine, if you're aware of that.
No, I haven't heard of any issues with that.
All right, this is exciting.
Yeah,
Yes.
there's a good question though that someone asked, is there any marketing material? So is there anything internal in your portal that like flyers or just information even that our
Yes,
brokers
yes.
can use to be able to share this?
If we can go to the next slide.
Okay.
And one more after this, and I'll come back and circle back. So
I think he
other way.
I think he wants to go the last one with the
Yeah.
contact information.
All right.
There we go.
So
I see.
we have in the resource center, we have marketing materials. So there's flyers that you can download to market the program. There's also a full webinar that you can watch anytime. It's me narrating it from start to finish, going into every little detail. And then we have, for general inquiries down there at the bottom, sales at AFR Wholesale. This is where you can email us and say, hey, can you send me the presentation? Can you send me the links? How do I get information? Simply, you log into the resource center. So you log into afrloancenter.com. You can click on the resource center. And from there, you can go to our marketing section, has all the information. We also have the information under our programs for our DPA Advantage program. We have a lot of information that's readily available. If you don't know where to begin, you don't know who your account executive is, you haven't done business with AFR and you're ready to start doing business with us today, reach out to myself or reach out to sales at AFR Wholesale. We're ready to help. So when you're ready to register, we're ready to help.
That's fantastic. So let's see, do we have anything else here?
I think our brokers still cannot believe the eligibility criteria is so wonderful. Like you just get AE on an FHA loan and you're good to go. So Carmine, they want to confirm all first-time home buyers are eligible regardless of income situation. Is that correct?
If you have an approved eligible through FHA, you are eligible for the DPA Advantage program. If you're a first-time home buyer, you're eligible. Let's say if you're not a first-time home buyer, but you have the approved eligible, you're eligible. Let's say you're in the medical field, you're a doctor. So a doctor typically is going to make too much money, so they're not going to be eligible for the DPA. However, with ours, because I'm going to say it again, I think this is the best one in the industry. If you're a doctor and you're making $500,000 a year and you've got an approved eligible, yes, you can use the DPA Advantage program on your primary home. You can do that.
Carmine, you and I talked a lot about this particular topic because really when you're thinking about underwriting or how underwriting will look at it, they really are just following FHA guidelines. So when it comes to seller concession, allowing gifts, it's going to follow FHA guides as far as approved eligible. So it makes it really easy when you're thinking about, I know we're trying to think of all the strings that must be attached to this type of product and you know what you can't do then, but yeah, it's really available to everyone with an approved eligible following FHA guides, even as a manual underwrite in that sense, which is really neat.
You know, it's hard to believe that there's a program out there that exists. You know, our team here at AFR, we're always looking, you know, to innovate in new products and bring things to market. And we brought this to market, one of the first to bring to market many, many years ago. And all we've done was make it better and better. When you think it can't get better, it gets better again. You know, we have a great team that supports everybody, you know, whether it's a one-time close or construction or the DPA, you know, we're here to help. And we want to find the products that help families get into the homes that they want. And we're excited to do that. And if you haven't partnered with, us in a while, reach out to me. You know, I'll be more than happy to to share all of the news and all the great things that we've been doing here at AFR.
Yes, and I want to touch on, while we still have a little bit of time, this program is amazing. We know where to get more assistance with that to put those together, but AFR does have some other really cool products. So if you can maybe just kind of go over, we talked a little bit about renovation and what's available there, but I know you maybe wanted to mention VA renovation, which is really popular, and then this one-time close, which sounds very cool too.
So with a VA renovation, on a VA loan, it's 100% financing. So when you have that 100% financing, and then you find the home that you like, and all of a sudden it's it's like stuck in that 70s shows, or stuck in the 80s, or stuck in the 90s, depending on what generation that home was built, but you love the home, you can do a renovation loan. And when it comes to the renovation, $100,000 is fine, $150,000 is fine. If you exceed the $50,000 on a renovation for VA, you need a HUD consultant. But you have a whole lot of options with VA. Even conventional, we have great conventional products as well. And again, we talked about the 203K. When it comes to one-time close, I always get a lot of questions, how does a one-time close work? And mortgage loan originators will get a one-time close, like, where do I begin? There's two concepts to think about behind a one-time close when you start it. Is the builder approved? And what is the house cost? And I've got some videos in our AFR Loan Center, Resource Center, that's going to walk you through that. I do multiple training sessions that walk you through that. So if you've never done a one-time close and you need to do one, we've got your back. Reach out to sales at AFR Wholesale, and we're going to help you. We'll help you register it. We'll help you register the builder. We'll walk you through the process. When you're ready to register, we're ready to help.
You're amazing, Carmine. I just want to take you with me everywhere. Make everything sound so great. It's really awesome. Yeah, these are fantastic products, really unique products. So I think AFR is a great partner when you need these types of niche products that can, like say, come in, as maybe a standard FHA and then turn into a down payment assistance and then maybe turn into a renovation. They can do it all, which is a really nice tool to have in this market for sure.
And we're very comfortable in the space. We've been doing this for years. So we'll be more than happy to share our knowledge with you.
So one of the things I think, Carmine, since we have some time, maybe how can the brokers leverage this to build their referral network? One is, getting some marketing done, like we talked about. Maybe you can help there. Are there other ideas like, who are the referral partners they can take these programs to? Is it builders? Is it real estate agents? Could you talk a little bit on?
So with our one-time close, you can establish relationships with your builders. And we've got some training materials that you can give to the builder and let them see what the programs are like. So in your local area, in your community, you have all of the builders that build custom homes. You have all of the contractors that do renovations. You have all of the realtors that sell the homes. Every one of those are partners that you can refer to. Builders want to build more homes. Contractors want to keep things getting fixed. And real estate agents want to keep buying and selling. So what happens is, one of the things that we all have in common is our customer, the buyer. We never know where they are at any given time in a buying solution, whether they're buying a new home, whether they want to build a home, whether they want to do a renovation. So having a referral base of all of these people that you're coordinating, that you have, that you can say, all right, you want to build a home? Talk to these builders. We've used them in the past. Interview them and see if they're a good fit, because the borrower ultimately has the decision in the end. Having this referral base of people that you can trust and have confidence is very critical in today's world. And this is going to allow you to build your network. So if you have some builders and contractors that you work well with, and your customers have interviewed them, they've done their research on them, and they feel comfortable with them, and they've used them, and everything has come out great, what better referral when you're talking to your next client than the word of mouth of all of these different people that you've worked with? And that's just going to strengthen your bond in the community, that you're going to become that subject matter expert. You're the one that they're going to look to. It says, oh, you need a home renovated, you need to go here. You need a home built, oh, you need to go here. And all you did was share information with your partners about how it works and coordinated it. So everybody can be a referral partner in that.
That's so cool. Some of the brokers are asking, how do they get signed up? I think maybe
Sure.
you want to talk about that, like how
reach out to me. So AFRwholesale.com, AFRwholesale.com. Click on partner with us. You'll do an online application and we'll get you started. Also, you can reach out to sales@AFR Wholesale. We can send you the link. We can send you the information. Also, you can email me, carmine.warren@afrcorp.com, and it's on there in the presentation. You can write it down. Reach out to any one of us and we'll be more than happy to help you. And we'll get you signed up. We'll get you on a training session. We can assist you in learning any of these niche products. And we start to build our relationships with you, our referral network.
Thank you so much, Carmine. This was a wonderful presentation. Thank you for your time today. We're excited to bring you more business through this, and I appreciate all of your professionalism. So it's been a pleasure.
It was a pleasure chatting with everybody today, and it's been great. Harish, thanks for having me, and everybody on the call. You know, it was a pleasure chatting and sharing my stories with you. Reach out to me and I'll be more than happy to assist you.
Yeah, no, thank you so much for the partnership, Carmine. We appreciate AFR support for ARIVE. You've been an early partner, so we really appreciate that. Again, thank you everyone for joining. This presentation will be available online by end of the week. So again, thank you everyone. And again, happy Valentine's Day. Thank you.
Thank
Bye,
you.
everybody. Have a great day.